Welcome again. So now that you're all ready and good to go, we're going to get started on our sixth T&A Live Tax Tips series. Today we're going to be talking about claiming off the home expenses, claiming that as an employee or as a subcontractor or as a self-employed individual. So first off, I'll introduce myself because you've been used to seeing Jean Talbot the last few weeks, but for those of you who don't know me, my name is Daniel Piché. I am the managing partner here at Talbot Associates, and I'll be doing today's presentation. So what are we talking about? We're talking about claiming off the home expenses on your taxes. So actually, before I get started, I should make a comment that we're doing this live. So if anybody is out there watching live, if you have any questions that pertain to your particular situation or just question in general, make sure to put it on the chat at the bottom of the screen, and we will do our best to answer those questions for you today. And for anybody who is watching this later on, not live, you haven't missed your opportunity. You can still send in your questions to talbot@talbotcpa.ca or call any one of our offices, and we'd be happy to help answer your questions for you. Okay, so what are we talking about? Off the home expenses, and it's a pretty relevant topic nowadays with everything going on with COVID-19. A lot of people are doing more and more work from home, right? A lot of businesses are shut down and sending their employees to work from their house. So I'm getting a lot of questions from individuals asking me, I'm working from home. Can I claim any expenses for that? And the answer is, like a lot of answers that on tax questions, it depends. It depends on your situation. There are a few different types of people who can claim off home expenses. So you might be an employee, whether you're just paid a straight salary or you are on commission, or you could be a self-employed individual. And all three of those have different criteria to whether or not you can actually claim off the home expenses. So I'll go over all the different situations and see what might apply to the different situations. So I'll start off with employees. So if you're an employee, to be able to claim off the home expenses, you need to have your employer sign off on a T2200. So that's a T2200. That's a declaration of conditions of employment. Essentially, for any expenses you might want to be claiming as an employee on your taxes, your employer needs to sign off on that. There's a specific section in that form that talks about whether or not the employee is required to work from home based on their employment contract. And for you to be able to claim expenses, they need to sign off as yes. Okay. Not only that, but in that declaration, it asks the percentage of the time that you're working from home, because there's essentially two criteria where it allows you to claim expenses to work from home. The first one is that you perform more than half of your job from home. So if on there, your employer marks that you're spending 25% of your time working from home, you do not qualify for that criteria, and you hope to qualify under the second criteria. But as soon as you are over 50% based on that, then you should be able to claim those expenses on your taxes. Now, the second criteria, if you don't meet the first one, is that you need to have a space exclusively dedicated to work and a space where you're meeting with customers, clients, patients on a regular and continuous basis. So what does that mean? Let's just dive into that a little bit deeper. It means that if you want to be claiming under that second criteria, you need to have a space that is just for work or just for that work, your work. You can't have an office that the kids are doing their schoolwork, or your wife is, or your husband or your spouse is doing scrapbooking on, or anything like that. It needs to be dedicated space for your job. And you need to be meeting clients on a regular and continuous basis. What does that mean? Like a lot of things with taxes, it's almost subjective, and they try and do their best to clarify that. But meeting somebody means that you need to be meeting them face to face. Generally, historically, that's been the case. And they haven't yet updated that for this new COVID world that we're living in. But the thought is it'll probably be updated this year to include virtual meetings, Zoom meetings, whatever virtual platform that you're using. As of right now, today's video, which we're June 9th, that is not the case. It's still face-to-face, but likely that'll be expanded for next year, but by the time you're filing your 2020 income taxes. And regular and continuous basis, what does that mean? Does that mean I can meet a client once a month on a go-forward basis, once a week, once a day? What does that mean? If you look at different case laws and different CRA bulletins, they'd say if you're meeting somebody once or twice a week, probably not going to qualify. If you're meeting somebody on a daily basis or more, you should be okay. So there is some kind of wiggle room in that particular aspect of it, and you'd want to talk to your tax professional with your specific situation to see if you should be able to qualify on that. Okay. Now that's for employees. For people who are self-employed, the rules are very similar. There are two criteria that you need to meet, one or the other, in order to claim office in the home expenses. So the first one is that your office in the home needs to be your principal place of business. So that means that's where you're doing your job. You're not renting an office space somewhere else. You don't own another building that your main office at. Your main business, your main office is in your house. If you don't meet that criteria, there's also a second criteria similar to the employee, where you have a dedicated space and you're meeting clients on a regular and continuous basis. Now, when it comes to employees claiming office in the home, in my experience, from what I've seen and from other practitioners, is that they're pretty strict on those criteria. When it comes to self-employed individuals, it's a little bit less of a concern for CRA. They tend to be a little bit more lax with those rules in terms of it needing to be your primary place of business. I've seen it where it's somebody has an office and an office in the home, and as long as they can show that they do a significant amount of work from home, there tends to be a little bit of wiggle room. But if you want to be 100% sure of being able to have those claimed on your return and be allowed by CRA, it should be your principal place of business. Okay. Now, we've talked about the conditions for claiming office in the home. Now, what expenses can be claimed? So in terms of the expenses that can be claimed, it'll depend if you're an employee, paid on salary, or if you're paid on commission, or if you're self-employed. Those three categories will have three different sets of eligible expenses that you'd be able to claim. So I'll start off with the most restrictive. So that would be for employees who are not paid on commission. For anybody who's not paid on commission, expenses you can claim would include utilities. So that would be your hydro, your gas, your water. It could include other heating fuel, such as wood if you have a wood burning furnace at home. You can also claim repairs and maintenance. So in terms of repairs and maintenance, that include cleaning supplies, repairs to the house, repairs and maintenance to the house or the yard even, and that's one category that I see a lot of people not keep track of. If they're doing repairs to the office to get ready, keep those receipts, make sure you claim that on your return at the end of the year. If you're paying to clean the office, again, keep receipts for that, because you can deduct it on your return at the end of the year. Something else you can claim: alarm monitoring. You can also claim rent expense. So you don't need to actually own a home to be able to claim off the home expenses. If for anybody out there who's renting a space, you can claim part of your rent expense as an office in the home expense as well. Okay. And then finally, you could be claiming telephone and internet as well to run out of your office. Now, one thing I've seen from a lot of people is, buying computers setting themselves up to work from home and be able to claim part of that. Well, a lot of people are getting help from their employers to pay for the new computer or the laptop to work from home. Is that a taxable benefit to them? Normally that would be a taxable benefit, but CRA has come out with a position that says they'll allow up to, I think if it's under $500, they will allow it to be not a taxable benefit, and you won't need to report it as income on your T4 at the end of the year. Versus if it's over $500, then it should be included as a taxable benefit on your T4, and you would need to pay tax on that. Okay. So now those were the expenses claimed for employees. Now there's additional expenses you can claim if you're an employee who's paid on commission. So for commission employees, you can also claim house insurance. So whatever insurance you pay for your house, make sure you keep track of that to be claimed on your return at the end of the year. You can also claim your property taxes as an expense as well, if you're commissioned, a commission employee. And finally, for people who are self-employed, they have even more expenses they can claim. So they can claim mortgage interest. So under the first two categories of employees, you wouldn't be able to claim your mortgage interest, but if you're self-employed, you'll be able to claim the interest paid on your mortgage for the year as a write-off. Okay, and you have to be careful. It's just the interest portion, not the principal portion of your payment. So you want to make sure that you're not just looking at what you're paying on a week-to-week basis or month-to-month basis, but you're pulling out the principal portion and only reporting the interest portion of the mortgage. Something else you can claim if you're self-employed is CCA, or depreciation on your property. Now, that's something that is a lot less common, and you want to be very careful with claiming depreciation on your property, because that will throw things offside for claiming your principal residence exemption on your property. So you may or may not be aware, but in Canada, here in Manitoba, if you sell your house and it's your primary residence, you can elect to have it, you can declare it as your primary residence and have it, the gain, whatever gain has been accrued from the time you bought it to the time you sold it, be tax-free. Now, if you're claiming a big chunk of your house as an office, and especially if you're claiming depreciation on it, then that will likely throw that offside and turn at least partially a tax-free gain into a taxable gain. So you have to be very careful with that perspective of it. Okay. So that's kind of all the different things you can claim as offs in the home expenses, or your housing expenses that you can claim. Now, how do you know how much of that to claim? Well, first of all, you should be claiming the expenses as for only the periods that you're actually working from home. So if you got sent home as an employee at the end of March and you've been working from home ever since, and you will stay there until, let's say, the end of October, you want to be claiming your expenses from March, the end of March, whenever you started working from home, to the end of October, whenever you stop working from home. And that means prorating your mortgage interest to only cover the periods that you qualify. But of course, if you're self-employed and you're working from home all year, then you'd be able to claim the expenses all year. Now, when you gather the total expenses, how much of those can you claim? Well, when you look at the wording in the Tax Act on CRA online, in the guides, they talk about having a reasonable apportionment that should be made for those expenses. So, and that's something you see a lot with, what expenses can you claim? They've used reasonable a lot. So the expense needs to be reasonable. The proportion you're claiming needs to be reasonable for the work that you're doing. So what we normally do and what they recommend is you take the square footage of if you have a dedicated office, let's say, you would take your square footage of your office space and divide that by the total square footage of your house, including hallways and everything, right? And then if whatever percentage that comes out to, let's call it 10%, for example, then you'd be able to claim that 10% of the actual expenses as a business portion. And that's the amount you'd be able to claim on your return. Okay. Now, what a lot of people ask me, well, what if I don't have a dedicated office space? What do I do then? I just have a desk in the corner of my living room that I do my work out of, or I have a laptop and I set up on the kitchen table. It boils down to what's viewed as reasonable, right, by CRA. What reasonable portion can you allocate to the business versus personal? So you have to look at your specific situation and see, how much space is that taking versus the total square footage of the house. Honestly, off the home expenses, it's not something that in terms of as long as you're being reasonable, it's not something that CRA takes too much offense to, doesn't attack aggressively. If it's something under 10%, normally CRA, in my experience, from what I've seen myself, views that as typically reasonable and doesn't overly aggressively challenge that too often. Okay. Now, I already touched upon it briefly, but something that a lot of people ask is, if now I'm claiming part of my housing expenses for the use of an office in the home, how does that affect my principal residence exemption? So I talked about that. And normally, as long as you're claiming a small amount, so they, I forget the term that they use. Actually, I have it in my notes here. If the income producing is ancillary to the main use of the property, then you should be okay. So there's a few different criteria. So it needs to be ancillary to the main use of the property. So if it's your prime residence and you're just doing a little bit of work there and you're claiming, 10% or less, then you should be okay. There shouldn't be any issues with that. If all of a sudden let's say you're a chiropractor and you renovate part of your house to be your office where you're meeting with clients. Well, if you're renovating, you're doing structural changes, and that office is, now you have 40% of your property is used in the office. Well, that will likely have that portion of the house be changed in use from a personal to a business, and that will affect the capital gains exemption on that portion of the property. But if you have an office in your basement and you're spending a little bit of time there, then you should be okay. I've seen it in the past where there's kind of a unofficial written rule of 30%. If somebody's claiming less than 30%, then from what I've seen in the past, they should be okay. But normally, you won't be claiming that high. It'll be normally closer to 10, maybe 15% if you're using extra space for storage, probably even less than that. Okay. And as long as you're doing that and you're not, changing the structure of your house to set up in a different office, you're not claiming CCA on the property. So again, I touched up on that when we're talking about claiming CCA. If you're not claiming CCA, then even more ammunition in your argument that you can still claim the full house as a primary residence. Okay. I think that mostly covers what I wanted to go over. Kayla, do we have any questions from anybody out there?
Hey, Dan.
Yes.
So it looks like our first question is from Scott Stevenson. What happens if your employer is from out of the country?
What happens if your employer is out of the country?
Correct.
So that shouldn't change the criteria. So whether your employer is out of the country or not, and does it say if you're an employee or a self-employed there, a subcontractor? Or he said employer, so I'm going to assume he's an employee of the company. So if you're an employee of the company and your employer is outside the country, I'm assuming you're not going into the office at all, and you're doing 100% of your work at home. And so because you're doing 100% of your work at home, then you meet that first criteria in terms of doing more than 50% of your work from your home. So you'd be able to claim off the home expenses on your tax return. You would just still need to get your employer to sign off on that T2200 that we talked about earlier.
All right. So that looks like it for the live questions. But Dan, what happens if you have both a landline and a cell phone? Can you claim both of those expenses?
Yeah, good question. So in terms of claiming landline and cell phone, I think Jean-Guy touched upon it a little bit in our first episode in terms of what expenses you can claim for business, but it's all about, again, being reasonable, right? So if you have a landline and a cell phone and you're taking all your business calls on your cell phone, then you might be claiming 100% of your cell phone and none of your landline. And if you're doing a mix of both, so you have a landline and a cell phone that you're getting calls for business and personal on, well, then it may be a matter of claiming a percentage, 50%, 75% of both of those expenses on your taxes. And again, other situation where you have a dedicated landline for your office at home, 100%. You can claim those expenses, 100% of that as off the home expenses, and then maybe a percentage of your cell phone, depending on how you're using it.
Great. So it really comes down to being reasonable.
Exactly. Yeah.
All right. So what happens if you do some landscaping or some work outside? Is that an expense that could be claimed?
Yes, probably. So it depends. So I touched upon that when I looked at repairs and maintenance, right? I think I mentioned that you could do repairs to the house and even the yard. So I hate to overuse the word, but it's all about being reasonable, right? So if you're doing landscaping, a garden in the back that no one's ever going to see, well, that might be hard to justify that there's some business component to that, versus if you're doing landscaping in the front of the house because you want to make it look as attractive to possible to clients coming in. Going back to the example where a chiropractor opens an office attached to his house. Well, if he's paying for landscaping to keep the front of the house or keep the yard looking presentable and clean and nice for its customers, then I would definitely claim part of that as an off the home expense on the person's return. And one thing I should also touch upon, that especially for something like repairs and maintenance, if it's when you're looking at the percentage that you want to claim for those types of expenses, you want to look at how is it being used, right? So if you just have a house that you have an office in, you buy cleaning supplies for the entire house, well, you might want to just claim a portion of that as proportion to what you're claiming the other expenses, versus if you're doing any specific expenses for the actual office, then you can claim all of those ones. And again, vice versa, if you have an office in your basement and you're doing renovations to your kitchen, well, that'd be hard to argue that it's for business reasons, and you probably wouldn't be able to claim part of that.
All right. Well, looks like that's all the questions we have at this time, Dan.
Great. Thanks a lot, Kayla. And so before I go on, I'll just remind everyone that if you found it useful, like, share, leave a comment. We always appreciate those. And we hope to see you next week. I think we're doing record keeping options for sole proprietors. So talking a little bit about how to keep proper records and books to help out your account and help defend yourself against CRA.